Transnet will invest 33 billion rand in its Transnet Port Terminals business unit, with the bulk of this investment being spent on multiple commodity terminals of Richards Bay and Durban. Joining us now for more, Karl Socikwa, the CEO of Transnet Port Terminals. Karl, thank you so much for joining us. Well, that's the headline number that we're seeing in the press today, 33 billion rand, and that of course is part of the larger 300 billion rand that Transnet has put on the table as part of that market demand strategy. Give us an idea of how that's going to be split up amongst the various port terminals that you have right now.
Yeah, the figure is correct. It's an investment program over 7 years, and at all our terminals throughout the country, from Richards Bay all the way through to Saldanha. And the lion's share of that investment will be at our terminals in KZN, Richards Bay being the largest one, and followed by Durban. And the reason for that is because there's a huge backlog in infrastructure spending at that terminal specifically, and so a lot will go into replacement activity, but also going forward there's a lot of expansion that we are going to be investing in Richards Bay. In Saldanha as well, we're spending roughly 5 billion rand in that terminal, which is going to bolster iron ore export out of the Saldanha iron ore terminal. We have in recent years spent quite extensively in Cape Town in developing the container terminal there, and also at the Port of Ngqura in Port Elizabeth in building out the terminal there. We are currently busy commissioning 2 additional ship-to-shore cranes at the Port of Ngqura, which will bring the complement to 8, and we are also currently in tender to acquire 4 additional cranes for the Port of Ngqura, in really positioning the Port of Ngqura as a major transshipment hub in the southern tip of Africa.
Of course, that port is just open. So how's the port doing from an operational perspective?
Port has been open since October 2009, and it has been doing phenomenally well. You know, it really has exceeded our expectations in terms of the ramp up to world-class productivity levels, and we've seen productivity levels there that rival productivity levels at the best container terminals around the world, which is why we are continuing with the investment. In fact, we've accelerated the investment at that terminal, which is why we have the 2 new ship-to-shore cranes that are being commissioned there shortly, and the 4 additional ones that we'll be acquiring as well as additional yard cranes, your RTG rubber-tired gantry cranes inside the yard that we're investing in. You know, the investment is also not only in assets and infrastructure, it's also in technology, ICT, which will help optimize the operational environment within the terminals, and also investing a lot in our people, development of human capital, to make sure that our people are operating optimally with these new pieces of equipment that we're deploying.
When it comes to the amount of funding, that 33 billion rand that will be funded by internal operational cash flows, and then what will come from external debt, what portion is going to be generated from internal cash flows? Well,
the funding of the investment program is managed at a group level within Transnet, and not at the operating divisions. But the model that Transnet follows is one where roughly, if you take the 300 billion, roughly 200 billion rand of that will be generated from the earnings of the company, and then the balance from borrowings in domestic and international markets as well. Which is why it's so critical for the operating divisions and for Transnet as a group to be financially viable in terms of being able to fund from its own resources quite a huge portion of that investment plan.
You're of course building capacity to meet market demand. Do you have one eye on the European situation right now, and how responsive is your strategy to what's taking place in Europe? Because if you do have a slowdown in Europe, a substantial slowdown, you'll have a slowdown in demand for exports, and of course that will have a knock-on effect to Transnet.
Well, we have more than one eye on it. We're watching it very closely, because our, some of our customers supply into the European market, some of the mining companies, and also the global shipping lines, the container traffic that they handle, exports, imports into and out of the Eurozone area. And we have, in recent weeks, seen a slight softening of volumes, which are as a result of a number of different factors. But we're watching that situation very closely, because for us it's important that we have a strong volume flow in all the category types that we handle through our terminals, for us to be able to sustain the investment going forward. At this point, there is no crisis on our part from a volume perspective, but we are watching the situation and hopeful that it should come back.
Tell us about the development of the old Durban airport, because Transnet bought that land for 1.8 billion rand. And when I was speaking to the CEO, Brian Molefe, he indicated that you needed private sector involvement in order to develop that land. Do you have private sectors who are willing to come on board?
The development of the old Durban International Airport site as the next major port development in South Africa is something which is much needed to continue to drive economic growth for the country. Durban is a preferred port destination for major shipping lines from a proximity point of view to global markets, and also proximity to the economic seat of South Africa, which is the Gauteng region. And also what we've seen is that through the container terminals we're currently operating in Durban, the level of demand can just not be sustained for a long period into the future with the current positioning of those terminals. So it's necessary to develop that port, but also not just for container handling, also for automotive handling, bulk handling, break bulk handling.
I mean, what is the cost of developing in terms of your vision? Do you have a number on the table, and how much private sector funding you need for that?
Yeah, there's no number on the table. It is going to extend over a period of time. As you indicated, the land has now been acquired, and I think now the work needs to start in terms of the development of the port itself. What will the port look like? Geotechnical tests that need to be done. The dig out itself is going to be extensive earth moving work that will need to go into that, and also building the port, as it were. There will, of necessity, need to be a very close working together between Transnet and the private sector. It's a major investment which is needed for the country. Transnet, I don't think, as Brian indicated, can do it alone off the back of its own balance sheet. And it presents the country, I think, with a major opportunity to partner between Transnet and the private sector. How those partnerings will be and will be structured, I think, will be a function of the nature and the level of engagement that now needs to start taking place in a meaningful way between Transnet and the private sector.
Well, there we go. For business with cash on the balance sheet, substantial amounts, I suppose there's opportunity there for investing in infrastructure. How are you positioning Transnet ports within the African context in order to position Transnet ports as competitive against Mozambican ports? We know that Rio Tinto has now started exporting coal from Beira.
Mm-hmm. Well, how we're positioning it is not as competitive ports, but rather to cooperate with the ports in neighboring countries more specifically. So for us, the level of engagements and discussions that take place between us and ports in Maputo, Port Louis, for example, Mauritius, Walvis Bay, is more how can we further boost and bolster the competitiveness of our port system. Yes, there is very good progress that we're making. We've been having discussions, for example, with Grindrod in terms of what they're doing at the port of Maputo. Earlier today at the African Ports and Harbours Conference, I had some extensive discussions with colleagues from the port, from Port Louis in Mauritius. We've had a delegation that visited us from the port of Walvis Bay at our Durban port in Durban. So I think the word is how do we partner and how do we collaborate, not how do we compete. Because for us, it really is about attracting more and more activity and traffic to the southern tip of Africa, bolstering the economic activity, South Africa in the region and into the African continent as well. And I think that in doing it that way, then everyone can benefit. And there's certainly a lot of volume out there, which if we attract to our shores, can benefit all of the countries in the Southern African region.
Well, thank you so much for sharing those insights with us. That was Karl Socikwa, the CEO of Transnet Port Terminals.